The proposal to modify the Banking Amendment Law of 2016 will have a big impact on risky borrowers, as banks will be allowed to charge a premium on those perceived risky. This will however be subject to a cap on the maximum interest that can be charged on a loan.
We want to allow banks also to check on the risk of a customer who is borrowing. So we're coming up with a legislation, if passed in Parliament, that the banks will have a flat rate on everybody, and then also check on the risk, because why currently maybe banks want to lend the government is because you are sure that you'll be paid. So, but we also don't want to lock out these other customers. But banks have a way of knowing their customers.
The Kenya Deposit Insurance Corporation plans to introduce a risk-based premium on depositors in 2 years, breaking away from the current model where banks are charged a premium of 0.15% of their total deposits.
A lot of big banks are crying, saying that we are charging them higher and they have invested heavily in risk management, while others who have invested zero, we are being charged the same price. So we are bringing fairness and equity into this, and we also want to incentivize the members to review and reinforce their risk profile, and then we also want to instill market discipline so that banks will think twice before they engage into any reckless business. You'll be very careful with the insider, very careful with the NPL. Those are some of the indicators we'll be looking at.
The Kenya Deposit Insurance Corporation says the risk-based premium model will reduce from uncertain to 2 months the time taken to resolve issues affecting a bank under receivership.
If it crosses the viability mark, then we should also have strategies that within the shortest time possible to resolve it, not 2 years. We want to try first with 2 months, if possible, within 2 months, but this one is conditional on a lot of things. If your bank today has a problem, please don't keep it.
The Kenya Deposit Insurance Corporation is at an advanced stage of increasing the cash a depositor can access in case a bank goes under from the current 100,000 shillings to about 360,000 shillings, which is twice Kenya's per capita GDP.
We are reviewing it. However, I always give this rider, my brothers and sisters. I don't want us to reach there. I don't want to liquidate any bank. So whether it's 100,000, 500,000, 1 million doesn't make sense to me. What makes sense to me is that how can we resolve before you go for your payout.
Currently, out of 2.76 trillion shillings in bank deposits, only 252.5 billion shillings by up to 97% of depositors are fully secured. Nicholas Ndwati, News Hour Business.